Welcome, Joyce and Colin. Happy New Year to you both. As we head into an auspicious year of the Dragon, let's chat about Asia in 2024. If I can start with you, Colin. Looking back at 2023, how did Asian equities do? What were the challenges and what were the positives in the market?
Sure. Actually, Asian market actually did fairly well last year. Markets like Taiwan, South Korea, India, they actually recorded more than 20% return. However, the key drags to the Asian markets were the performance of China and Hong Kong that dragged down the overall market performance.
With a lot of challenges being priced in the market, a more benign inflation and potential for interest rate cuts, how does that bode for Asian equities in 2024?
I think the key here is that with interest rate cuts, manufacturing and trade will resume. And with more manufacturing production, that will provide more jobs. And provide more jobs means consumer confidence will certainly improve, and that will actually allow for a stronger market going to 2024.
Joyce, if I can turn to fixed income markets. In 2023, Asian fixed income did fairly well and even outperformed Asian equities. What were the main drivers?
Yeah, 2023 was a good year following a not so great 2022. So, of course, for 2023, Jackie Composite Index was up 7.4%. So, 2/3 of the contribution came from the tightening in credit spreads, whereas 1/3 of it came from the reduction in interest rates. Also, we see a reduction in the universe, whereby in 2023 we saw a reduction in the new supply by 19%. That's following the previous year that in 2022, the universe actually was also reduced by almost 15%. So that strong technicals, that limited universe makes it very good for the market in the sense where investors were looking for reinvestments of their money.
Will this momentum continue in this year? If so, what are the yields that you expect?
So for 2024, we are seeing currently the yield to maturity in US dollar terms is around 5.3%. Then the next question is that do we then expect the credit spread to tighten like last year? But if you look at it historically, current spread is pretty tight, so we have less of an opportunity there. But what's good for us for 2024 will be the stability in the interest rates.
So which are your favorite sectors and countries, and which will you be avoiding?
For 2024, because of the reduction in the Asia space universe, we are looking into other opportunities out of Asia. So that will be like Japan, Australia. So we do see some issuance coming out from there, which give good spread and overall yield for our space. Then for 2024, we will continue what we were cautious about from 2023, which is continue to be the China property sector. Another space that we think we should be very careful about, although there are a lot of different opinion about that, is the local government financial vehicles in China. So while China may not allow any defaults at the moment, but there are structural difficulties and challenges that we see.
Now, Colin, if we move into the Asian stock markets, do you see a turnaround in China this year?
Okay, my straight answer is yes. The Chinese market actually underperformed for 3 consecutive years. Valuation is at its low end of its valuation band. The key is whether China can actually alleviate its concern on its real estate situation right now. Secondly is that the geopolitical tension between US and China is a rivalry of great powers competition, which means that for these two economies, which are very intertwined with each other, with trade of, US 700 billion, annually, they need to find ways of collaboration rather than intense competition. Aside from that, once China resolves the real estate situation, then investors can refocus on what China does best. The focus will be how China is involved in the green energy transition over the coming decade.
What about India? ASEAN markets?
India had a strong fundamentals. They are growing very strongly with the world's largest population, and the income per capita is still very low. So there's the government policies that have been in place, has been allowing the market to continue to grow. As for ASEAN here, is that because our economy are also very dependent on the growth of China. If China growth recovers in terms of economic growth, certainly ASEAN will also benefit likewise.
Colin, Joyce, despite a challenging year in Asia, we delivered very strong returns in both equity and fixed income. I want to ask you both, how do you continue on into 2024, and what would you do different compared to last year?
So for 2024, we are likely to continue what we have been doing well in 2023, is to prioritize our investment in terms of which issuer has the best ability for payment, instead of usual way trying to find the maximum yield for the portfolio. Current rates is typically slightly lower than where it used to be for 2023, and that will encourage higher supply coming from our usual issuers. So we will also take opportunity of that, and if spread should widen, we will take opportunity of that. And of course, the last one is that we have seen so much volatilities, and I suppose 2024 there will also be volatilities as well. Given the geopolitical situation out there, there will be maybe something that we have not seen now, that something happen. We will always be ready for that, and that if that presents an opportunity for us, we will take advantage of it.
Last year was a outstanding year for the team in terms of performance. We basically had nailed in two areas. One, we were spot on in terms of country allocation decision. Our underweight in China and South Korea, while overweighting Taiwan and India, actually were the main contribution in terms of asset allocation decision. We believe that going to 2024, our AI-assisted stocks model have actually picked interesting stocks still in the AI sector, AI-related sectors, as well as we are also anticipating stronger interest, going to 2024 in green energy transition-related stocks, which means your EVs, your EV batteries, your EV-based materials, your solar and wind energy. This certainly will put UOB AM equity positioning fairly strong as we go into the year of the dragon.
Thank you, Joyce. Thank you, Colin. We have hope to have a great 2024.